looking in particularly? And also, can somebody confirm if you can hear the music playing or just me talking? That's important. Can you guys Yeah. Okay. Fuck. I got So I sold it earlier today here. I sold it here. My stop is at 62. So basically, and so we are retesting this order block here now on a 4-hour basis. I think what's going to happen is the following with the gold. It rallied off the lows, so we've been you can see probing these lows. I think these lows, again, coming from this daily. This is a daily chart right here. We've been in the downtrend and we've been probing these lows. I think those lows are not going to hold. I think we're gonna blow through them. So as you can see, every time we've been pumping into the 200, this line right here, this moving average right here is a 200 moving average. So you can see we've every time we pumped into it, we found sellers. So not only that, we're essentially in a range. This low right here, and you can see it's been serving, and this is the low, by the way. This is from the weekly chart. This here, and we've been retesting that low pretty much, banging against it. This is this red line. So I think as long as we stay within this downtrend channel, we don't break out. We're still looking for sales. So my stop is I actually put my stop above this high here. Maybe we'll close some price inefficiency, spike up on the NFPs, but we also did so the daily range for gold is 25 points, 24.60. We already did 25 points. So this is the daily range cap right here. We can go a little bit above it, but given it's Friday, et cetera, I think if anything that goes above 60, 1660, I would, if you're not short, I would short it around 1660 right here. Any spike, especially if we take out this spike right here, it's just going to be a liquidity grab, and then the profit taking will ensue. This is a very aggressive price action too. Usually, an aggressive price action like here, boom, it's only bullish, bullish, bullish. It's followed by at least some bearish profit taking, and with the news, I think this is a perfect opportunity for that to happen. So that's what I think about gold, and all the others are very similar. I'm looking for a sell in euro dollar here on a 4-hour time frame. Waiting for that break. So obviously the trend is down, uh, and just you have to find good spots to go short. So that's what I'm looking at. And we're just oscillating around this trend line here, I guess. So, and depending how we close today will be quite telling. What else? Pound. Oof. So we can remove this. This is a weekly order block here, right here. We basically went to it, and we are putting in a weekly engulfing candle in a downtrend. This is it's not really looking that bullish for pound. I think any rally should be sold. If you see this area right here around $14, I think that's a very good short. I think personally. So if we get there, let me make this a little more transparent. 50. Come on. Give me one. That make you pretty. So that would be my sell zone. If we get there that high, we might not even get there because we obviously this was a corrective price action into the resistance. And where is it? Oh, and look, this is a weekly chart. So this was the previous support. We broke through the support. We went to the support, put in a weekly reversal candle, as you can see here. Even if we close a little bit higher today, doesn't matter. This is pretty nasty reversal candle for a weekly in the downtrend. So no bueno for a pound. Let's see. Hold up. Let me see what's happening. One sec, guys. Yep. So pound. Pound. Sorry, I'm a little. I had like a couple hours of sleep. Brain is still a little slow. So that's gold shorts. Yep. I think gold shorts should be. Yeah. So gold is a damn sell for sure. So Dow Jones and somebody asked NZD CAD. Let me see NZD CAD real quick. I haven't looked at NZD CAD for a while. So again, see, this is the last time I did analysis for NZD CAD. So by the way, this is what my trading setup looks like. This is a weekly, daily, 4 hour, 1 hour and 15 or 5 minutes. Basically, it gives me a nice understanding where everything is. So, for example, on the major flow on the weekly is obviously down, higher, lower highs, lower lows every time, right? So we've after an aggressive sell off, we've done a pullback into the moving average cloud, which is a value area, and this was the previous. So again, previous, and we can draw fibs here as well. And this is how you do analysis, by the way, top down approach. So we've tagged 618 zone and 66%, one third, and we're putting this hammer, inverted hammer candle, which is looking like a reversal. So depending how we close this week, if we're going to close it like that, and next week we're going to start rolling over, taking out the low, I would expect this thing to start making new lows, basically, because nothing has changed fundamentally in the world's picture. And look at this daily candle here, right? A nice reverted hammer. So if you're, if you're short, your stop loss should be here, and you should just, or you can actually even short that the market with stops here as well, even though it's still kind of making higher and higher lows. But I think this chop fest is about to roll over. So you can, if you want to trade it, if you want to trade it safely. Let's do this. You can wait for the trend line break. So if you don't want, if you want, because it still hasn't confirmed major structure break, right? So the major structure break will be here. With this low right here, right? So as you can see, it coincides these lows here. So the price can go here. Basically, you need to wait for the break. Once you see the break, you know, use a little bit of a pullback to get into the short position. And this is what I would expect this thing to do. All right. So that's NZD CAD. Let's see. Ba, ba, ba. Oh, stock indices. So I made a video basically last Friday. Last Friday we got this pump right here, and I made a video talking exactly about why why this is all of this shit is fake and is going to roll over. Meaning this was a buy the rumor, sell the news. And as you can see, we've taken out uh, the previous swing low. So and well here too, I guess. So this was the new high. This was previous low. So we've broken two structures, two swing structures already, which is telling me that we are starting a downtrend move again. Break of a trend line as well, confirming it. So any pullback at this point is a sell, is not a buy. So where can we sell this piece of shit? This is a nice order block. We can see we already tapped into it and we are reversing. So again, this is an hourly chart. Pump into it. Let's see how this candle closes. Basically, with the NFPs in 12 minutes, by the way. Um, so yeah, if this can this is an if this candle closes like this or lower, basically I want to see a full red candle. This is a very nice reversal pattern off of heavy resistance zone, right? So you have this is basically going to be a top formation, a pump, a spinning top, and a reversal engulfing candle that engulfs this previous candle here. So this is a very nice reversal pattern, and it looks even bang very nice on the 4 hour time frame. So US 30, Nasdaq, they all Nasdaq got completely obliterated. It's already at probing lows from last Friday, not last Friday, 2 weeks ago. So and it doesn't, again, uh, sell off, a little bit of a rally pullback into some old previous trading range, and then a nice engulfing candle like this. Every time we got an engulfing candle here or here, it usually is followed by a sell-off in weeks to come, next week, etc. And and I think that's going to be the case here as well. We might chop up, but depending again on news today, NFP might. Uh, but no matter what NFPs print today, it's going to be irrelevant. Not irrelevant to an extent, by the way. Nice triangle sell-off. We were trading this lively yesterday, thanks to one of our moderators, traders. So let's see. So this is Nasdaq 5 minutes. Again, we're trying to do a little bit of a pullback bullshit prior to the NFPs, and um, so Fed basically said just because 1 month data is going to be supportive for more dovish stance, the 1 month of data is not enough. So if NFP even prints something which will indicate that the economy is doing super poorly and the Fed needs to ease off on the rate hikes, it's going to be irrelevant in grand scheme of, not irrelevant, but we will need to see a lot more than just one NFP that shows that poor jobs um, numbers. And we are expecting about 200,000 jobs, which is not a high number. So we can easily come in line, and that's going to be bearish for stocks. US 30. US 30 actually very easy. So this is a weekly picture. Boom, boom, boom. We've rallied right into the resistance. This is a daily. I basically said we're probably gonna do the same thing as we did here. This was previous FOMC, and not previous, but a few months back. But we've done the same thing. Look at this pattern here. We rally, lower high, another rally into the resistance, and a very aggressive rally. No pullbacks, pretty much. Same thing here. Look, same pattern. Up, pull, trying lows. We're not making your lower lows, and then a squeeze, an artificially designed squeeze to stop out all these people and get idiots to buy into this rally. Right into the resistance, right before FOMC, and with selling hopium that they're gonna pivot, they're gonna schmivit, all this bullshit, and then they unload their positions into these morons who bought all this. And so, I mean, trend is your friend. We're making lower highs, lower lows, and nothing is telling me that this should be any different from here, from here, from here, or from here. Right? So you have to the probability again. Nothing is 100% in trading. You have to see where the probability lies, and probability lies right now with the downtrend. Now, this is a daily chart, right? So let's take a look at. And as you can see, the weekly never actually closed above the resistance, and we're retreating anyway. So what's happening with the? We've broken this previous swing, right? There's a structural break, and on a 4-hour basis already, showing us a reversal pattern. So we just retested this order block here, and are rolling over. Maybe we can go a little higher. Maybe we can go up here. So something. It's not. Oh no! Shit. Oh, it's not on Discord. Yeah, yeah. Sorry. One sec, guys. Thanks for letting me know because I'm streaming on YouTube and every anyway I'm streaming everywhere. Yeah, as always. Yeah, yeah. So yeah. So NFPs in 5 minutes, 6 minutes. Anyway, so um, the US 30. One sec, guys. Let me. What the hell? Let me make this music a little lower. I'm like jamming over here. All right. So again, where are we? So even if we have a little bit of a pump, I think we're gonna. I think the trend is returning to down because this held up very well compared to Nasdaq and S&P 500. But if those are going to be keep on rolling, there's nothing. And again, we had a structural break already. We're making lower lows and lower highs. It's trying to make. I think this is a sell. I wouldn't sell a US 30 honestly. I think S&P might be a little better because it's somewhere in the middle, and we there's a technical setup right here with a nice reversal pattern. So if I have to choose between Nasdaq, which is basically on the lows and was already aggressively sold, uh, maybe this trend line break I can sell that. But I think S&P has like the best of both worlds because US is a little too bullish. Yesterday's candle also was a little bullish. So not I don't want to I don't want to short the strongest of them all. You want to short the weakest. So it's either Nasdaq or S&P if you want to short. Yo. Yeah, so basically the NFPs, let me see what we're expecting 200,000 jobs and 197. So that's a very low number as it is. So if we come in line, that means the economy is doing fine and Fed doesn't have to pivot, we go down. Basically all of overnight action the dollar has been selling off. This is USD CAD. It's just been being hammered, 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 hammered. And so we're getting again, we're pretty much getting buy the rumor, sell the news again situation. Well, here, sell the dollar and buy the news, so buy the dollar afterwards. And so that's what I'm expecting. So like gold, it rallied overnight for no reason. Well, it was what support so pretty aggressively. So I think if we get inline numbers, we'll will sell hard the risk assets. So whether you're selling S&P or gold or any currency versus US dollar, it's the same thing. Um, yeah. So if the numbers are going to come in strong, meaning beat the expectations, that's going to completely destroy the market. Weaker number, meaning I think we're going to have a risk on as a knee jerk reaction, but like I've explained it a little earlier, we one data point is not going to shift Fed's policy. So even if we get a weak NFP, it has to be like super, super, super weak, meaning instead of adding 200,000 jobs, let's say we lost 200,000 jobs. That's going to be a big sign foretelling that, in that case, stocks and risk will rally. But as an initial knee jerk. So let's say gold rallies to 1670 or something from 1650. That's again, it's a Friday, so it's going to be a nice sell. You're just going to have to sell a higher resistance basically, but it's still everything still is a sell for now. Nothing has changed. So yeah, let's 2 minute warning. All right, hop on stream. See somebody asking euro by 12:30. Uh, that's a well, you're not going to be buying it just because NFPs hit. I mean, if you want to really buy euro, you can buy it right now. Why wait? And no, I'm looking to sell it, not to buy it, because again, I think a spike in euro will offer a good selling opportunity. Not, I wouldn't be buying it now here. So that's my personal again. Uh, that's just something personal. All right. Oh shit! There's a lot of questions. One sec, guys. Um, Expecting a spike to the upside and then hopefully sell, but we'll see. Yeah, exactly. Somebody wrote about the gold that they're expecting a spike on the news and use that spike to sell fade gold. That's exactly right, and that's exactly right with all risk. Yeah, basically, risk is going to spike, and then off we go. With the somebody mentioned about dot plot. So gold sell for yes. Dow Jones pull upward, then reversal. Yes. Oh shit! Fuck, the numbers hit while I was yapping. Fuck. 261, baby. Woo! Look at that. So it's a high number. We beat expectations, and the markets are selling it because the economy is doing strong, and that's the algos selling the shit out of risk. Yep. Boom. So we'll see. Always remember, NFPs are like this is straight up algos trading right now, and when algos trade, there's going to be an initial reaction. Then they're going to start taking profits, so it's going to have a reversal. So they might even probe the highs, to stop out newly minted shorts. We don't need this anymore. And after that, we're going to get a real move. So we might have a pullback. And then once we start selling off, that's if we start selling off in like 15, 20 minutes, that's when you want to hop on those shorts. But I already have a short in Aussie. I sold it right here, somewhere here. And I'm long USD CAD, which is overnight though, so it's a little on the waters. This is not looking good. S&P. So yeah, so see the algo's initial reaction. Now they're probing. So we're gonna dick around a little bit. Let's see how we do. Nice 10-point drop in gold. So like I said, initial reaction counter reaction, and then a real reaction. So the third reaction is the one that you want. So after the profit taking. All right. So let's see the questions. So the dot plot on Bitcoin, fuck, on FOMC, basically the biggest thing that why the markets reversed on Wednesday was the fact that they've mentioned that even though they might not do 75 basis points next hike, what they're gonna do, but they still have to hike a little more, not a little more. Overall, they will hike higher than initially expected. So the rates will still have to rise. They might rise a little slower, but the end result will still be a much higher interest rate than they first expected, and that means there will be more hikes than expected, and that's why markets sold off hard on Wednesday. So, and this just proves the fact that, um, well, it proves the fact that this is exactly what's going to be happening with Fed. That they have no reason to pivot, and with a strong jobs report like this, so initial reaction, like I said, is over. And whoever scalped, I was yapping, so I didn't even I didn't get out of I'm short 52, so it's 48. I didn't get out. It was a nice 10-point quickie. Let's go to 1 minute chart just to for shits and giggles. And it doesn't matter again. What asset class you look at. It's all so yeah. Nice 1 minute dump, and then they bought it. And this is all algos basically. That's why it was so quick. Algos sold it, took profit, reversed back into the same trading. Um, um, Whatever zone and block, and then, well, now we'll start seeing if we're going to get a real move to the downside or to the upside. The spikes on fucking on indices are pretty impressive too. So Nasdaq did a nasty one. See, so look what Nasdaq did. It's 5 minute. It also took out, so it didn't take out the ultimate high, right? The swing high, but a lot of people who had stop losses here or here somewhere, so they ran the stop losses, grabbed liquidity, and then whacked it. And that was quite a that's a quite an impressive drop in 1 minute, 100 points too, right? What is it? From 800 to 600, 200 point drop in Nasdaq in a second, not as whatever, less than a couple of minutes. Impressive. Something came out of Canada too, and so the dollar CAD is employment change actual. Oh, okay. Canada posted some sick numbers. That's why dollar CAD is. But again, this is bullshit. So I'm gonna be looking to buy around this area. Let's see what. Okay, this is coming back. So now, initial reaction. See, this is the Aussie or whatever. Let's look at anything really. Initial reaction. Now we are doing this pullback. So give it another 10 minutes or so, and we're gonna start seeing real moves, not these fake outs. So see now, gold is pumping. Did the lows. Now we're taking out the stop losses here. Boom, there goes the stop loss for people who whatever they were doing. We're gonna now probe the highs. You see 60, 1660, you sell that shit. So if you see it, stops above this point here. So 1675 is your stop loss. Oh, and the euro is pumping into my sell zone too. All right, a little more. And you have to be aware of those market tricks, meaning the initial reaction, the counter reaction to the initial, and then a follow through. I don't know where the follow through will be though. It might be to the upside too. It might be to the downside. But you have to basically let the manipulation of the price be over by algos and big market makers. Once the price settles a little bit, that's when you enter your trades because or I mean you can enter trades whenever. You just have to have very wide stop loss or no stop loss. Just monitor it and close it if something goes against you if you have the discipline, right? So either no stop or wide stop to allow for this volatility because basically look what happened. This is a previous 4 hour candle. People who were long just got stopped out with this wick. People who were short just got stopped out here, right? So, so everybody got taken to the cleaners who were just trading news and having stop losses too tight. So that's why when there is a new heavy news like FOMC or NFPs, you just open stop losses, let this fucking price settle, and then close your position if it's against you when the price settles. But don't panic when the initial reactions occur. As you can see, we've taken out this high, and we're now not really doing much afterwards. So we grab liquidity here, and now the real move is going to emerge in about, like I said, wait a little more. It's only been 8 minutes. So about after 15 minutes or so, even sometimes half an hour, that's when you get a real move. Uh, One second. Okay, doke. So let me see the question. Sorry. Shit. All right. So let me see the questions. Uh, bu- bu- yeah. So the gold entry is 1660. If you see it, silver. Oh, look at silver go. Uh, so silver is actually trying to rally hard too. So silver reached its daily range right here or just now. You might want to short silver if you want to because we basically grabbed liquidity, and I don't think we're going to see much higher in silver today. So if you don't want to trade gold, we've tagged 618, 66%. Um, not bad. Obviously, we can go all the way up here to close this, mitigate this price action here, close this price inefficiency. So we might go a little higher. So your stops have to be above these highs here if you sell. So again, reduce position size if you can afford it. Don't over leverage. But during NFPs or FOMCs, the volatility is much higher. So the amplitude of moves is more. So that's why you have to reduce your position size if because you don't want to get whacked out and be down instead of 2%, 5%, 10% or something. And so employment, blah, blah, blah. All right. What else? Let's see. So look at and now we're gonna be seeing real reaction. Look at this. Look at this shit show. Uh, so see, now we're selling off again. So basically, we grew. Hold on. Where's my thing? We stopped out people. People stopped. People who were short. Stop losses here. We grabbed their liquidity. First, we grabbed the liquidity of people who. This is previous swing. Was right here. So we grabbed. Well, we took out everything, even here. So we grab liquidity from the bottom, then take it back up, stop out people who were basically stopped out people who were long, who were buying this. They got stopped out just now. That's what we saw. Now people who were short somewhere here, for example, their stop loss was here. So we've market makers ran their stops to grab their liquidity. So now that they've shaken out all the weak hands, meaning idiots who don't know what the fuck is going on, that's when the real move is going to start happening. So for now, we're starting down. Let's 5 more minutes, uh, and we'll see. Also, hourly candle close is important. So this is a Nasdaq. This is a bear flag that just got popped. But unless we this candle needs to close bearishly, because now it looks like we've ran the stops, and we might get like one of these. This was the exhaustion candle. I don't want to see an exhaustion candle like here. See, this is an exhaustion candle, and I don't want to see any exhaustion candles on 1 hourly basis, and that's what a lot of them are looking like right now. So 17 minutes till the hour closes. This thing needs to close at least halfway down, because otherwise it's gonna risk will pump, meaning it will go up a little more. See, like this one is already reversing again to the top side, so a little more 1660 is a good area to give it a whack. What else? Let's see. Okay. Goddamn Bitcoin got popped. All right. All right. Let's see crypto. What happened with crypto? So crypto has been a bitch trading. It was basically we're doing this. This is Bitcoin 4 hour. We are essentially just in this range right here. See, a 4 hour pump, and now we're just sell 21, buy 20. That's it. Just trade the range for now until we have a breakout. That's the on the 4 hour basis. That's what I see. So again, a lot of volatility. Probably high. We took out the highs, we took out the lows. Everybody got stepped out. We cleared out the stops, and now we're ready for the real move. So let's again wait for the hourly to close. I'm also watching bonds, which I don't want to switch the screens. So the bonds are being actually bought. They crashed at first, meaning yield is going to be supporting dollar strength and the risk off. So either bonds are going to win or everything else will win. But bonds usually are very indicative. They're very indicative, showing where the true direction of the market lies. Give me a sec, guys. I'm going to go grab something to drink real quick. One sec. All right. Back. Let's see. Gold, 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 gold. There we go. Almost at 60. Definitely a sell here. And just leave it overnight. I mean, over the weekend, because this is definitely gonna some profit taking will ensue at the end of the day for sure. So 1660 sell. Again, it might pop a little more, couple of points more, but unless we take out this trend line, weekly trend line, we are just consolidating to it. It seems so more sideways, more chop fest. So sell the range extremes. So around 60, 70 is a sell. Your stop losses should be at 80, I would say. All right. What else? I'm looking at bonds. Bonds are actually not confirming any of these moves. And last time bonds did not confirm it was last Friday when we got this bullshit move, and that's how I knew it was bullshit because the bonds were moving the opposite of this, and they were saying no, 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 this is a fake pump, and that's what I'm seeing today right now. Again, we'll see again. Let's see how the hourly closes because it's still finding its range. See, it's probing, probing, probing. People are why are algos and big traders are doing this? Because it makes people FOMO in. People, oh my god, it's the price is leaving me, and they start making poor decisions because they're based on emotions of fear of missing out. Oh my god, I'm missing all this profit I could have been making, blah blah blah. Or they are in position they're like, oh my god, this is going against me so bad, what am I supposed to do? So they close, reverse, revenge trade. Anyway, when mayhem ensues, people do dumb things, and that's the point of this whole situation, to people to be like chickens without heads running around aimlessly. So you got to stay cool, and to stay cool you have to understand where everything is moving. So dollar is getting a little hammered. Dollar index, I'm watching dollar index. So let's see how far we can go. It'll go a little lower. Again, completely not confirmed by bonds, but come on, euro. So euro is approached. It's in my sell zone. I'm gonna wait a little bit. So what? I don't just leave an order here like a dighead, and then the price can blast through these things and maybe retest the lows here. So in order to not to be just leaving orders and being stopped out, you wait for some kind of turnaround. So you go in 5 minute. Once the 5 minute, again, this is just the beginning of a trading day. So do not think that, oh my God, 5 minutes has passed, I haven't done anything, and you try to force yourself into some trade. Wait, the stock market is going to open in 40 minutes too. So there's no rush. We see some kind of reversal of the resistance before you jump uh, into action, because 5 minutes is not going to be. Um, hold on, what? Oh, so 5 minutes is not going to make a whole lot of difference if we have hours and hours and hours and hours to the end of the day, right? So don't think that just because. So another problem with a lot of novice traders, what they do is they think that they have to jump in immediately into action, into fire, instead of staying patient, letting price develop properly, uh, and then get into the trades. Oh, one sec. All right. So again, and these are 4 hour candles. So, for example, this was previous resistance here, these lows here, as you can see. Right. So we broke down, we did a retest, and then sold off. We actually did a peekaboo above the resistance zone a little bit, right? But we didn't close above it, and that's why it's important to wait. So this 4 hour candle can do a little peekaboo above these highs and still reverse and then go down. But that's a 4 hour candle, so it takes time, and that's why it's important not to just rush into trades just because something is still developing and happening, because you're still going to have a lot of time after that. Look what happened, right? So at least this move right here took out these lows, and look how it developed on the 1 hour time frame right here. This 1 hour, this is that previous thing. We went into it when we posted a hammer candle and then a follow through. That's when the shit hit the fan, when it sold off properly. So 5 minute, let's see if we get a reversal candle here on a 5 minute chart. If we start rolling over, you can short, put stops. I would put stops above here. So let's say maybe here. So like like 40, 30 points, not bad. 30 pips. 30 pips stop loss, not bad. So maybe a little higher, maybe 50, 60 pips. And you're going to target the lows. So that's going to be about 100 pips. So 2 to 1, 3 to 1 ratio, not bad. We'll see. Again, see, no reversal until we see some kind of reversal pattern. So a bullish candle, then at the top candle, and we need candle to close, showing us the bottom, like a rollover, kind of like you did here. So. All right, gold. Where's our dear gold? Gold. All right, are you at 60 yet? Almost, almost. Well, having trouble. I just sold at 58 a little more, so it doesn't matter. 58 to 60, close enough. Ba-bum. Okay, so let's see euro again. So euro is having trouble at this order block, but I think I think they'll run the stops. They'll run the stops and then roll over. Markets are challenging Bank of England's views on interest rates. No shit. There we go. So they ran the stops, and our dear friend gold is at 60. So let's tag this underneath, and that might be a good sell right now. Again, wait for a little rollover. Remember what I said here? We didn't get a rollover candle. That's why it's important to wait for a rollover candle and not just leave an order at the order block. This is like a perfect example why you should chill. Wait for confirmation instead of just leaving an order that will get blasted through. Oh, S&P is getting into. I already have plenty of trades, but yeah, this is getting into another sell zone. But this is fair value gap right here. The price inefficiency. We might need to close it before it starts rolling over again. So we did 5 waves after all. So 1, 2, 3, 4, 5. That's a Elliott wave. So this wave from here to here is completed. So now it needs to do a 3 wave pullback, and then it's going to sell off. And we do have CPI next week. That again, we took out these lows here. So these lows here. Shit. All right, hourly candle close. So as you can see, we're getting to resistance. So we took out these lows here. So the structure break is there already. And so let's now check the hourly candle. See this? The initial reaction was correct. Now we're pushing up. Let's see. So because this is a hell of a bullish candle now, you have to be careful with shorting. So if you're gonna short, you got to short at strong resistances. Gold already went up. Went up almost 2% today. So that's already it's running at the bonus territory, and so maybe a little more, like I said. And this candle, for example, here, this candle at some point it was a huge bullish candle before reverse, or like here, like this one here, right? And then the probe got above the 200 and reversed. So if you want to scalp, you can also scalp here. Couple of points, couple of points, couple of points. Every time it moves up a couple of points, you fade it, and then you catch a little pullback and you close. So 3, 4, 5 points. Sorry. Shit. So that's that. One second. Let's see. All right. One sec. Got to take care of some messages. All right, Goldie Gold. A little more bullish. If anything, you can add at 70 and with a stop at 80. So all right, 9:03. So gotta wait till 9:30 for cash. We'll see what cash does. So for now, this is getting a little bullish, but I think this is overextended, and the bonds are completely. Well, bonds actually now are being bought, so bonds are confirming this weakness right now. Okay. All right, guys. So, like I said, I'm sitting in my short here. Stops above these highs. Again, and I'm gonna hold the position because when you have these type of super aggressive moves, they tend. There's a there's a gap here. There's a gap here. There's no point in eating a stop loss because it's gonna roll over and close the gap at some point. Anyway, so even if you're down 10, 15 points, add a little at the top, one more, and average down because you're already buying um, in a overextended market. I mean, you're selling in an overextended market. So uh, even if it's again goes against you, you can always get out of break even. So no harm done in any case. All right, gents, I'll be back in like 25 minutes after, or like half an hour. I'll kill those streams, but if anybody has any questions, you can ask now. And if not, I'll be back in 20, 30 minutes. Best trades to take today. Best trades to take today. I think best trades are to fade these moves because again, nothing has changed. And for example, in gold, we're just oscillating in the range. So it's just get out of the range, sell the range tops, and that's about it. The aggressive, and again, uh, the stocks are not even rallying that much compared to some other assets. So this overextension is a little bit overcooked, just like it was overcooked because, for example, I was short the S&P. I was short somewhere here, and when it was still rallying last week, I had to hold the piece of shit over the weekend, and I made money after the fact. So just because the trade goes against you, you have to understand where you are on the map of things. And despite the fact that it went against me, and everybody everything looks so gloomy and doomy and all of that shit, you have to realize that it's manipulation and why it's done, and that if even if you have a losing some a trade, you can get out of it easily if you just don't panic and not use remote emotional responses as your guidance, and realize what's being done to the market for what reason. And like I said, you monitor internals like this move again. That was not confirmed by the bond market at all. So I knew that the FOMC's on Wednesday, so they were just jacking the market up on no news, on nothing. That was a Friday, on nothing, just to sucker in people, and then they unloaded on them and took out the lows here. So they might do the similar thing here, close this fair value gap or price inefficiency because they're to mitigate the price, and then roll over. So if that's the case, also be just don't panic. This is the high, this is the low, and what happens in the middle is who gives a shit. If you're trading on a 4-hour chart, obviously, if you're trading on 1 hour, 5 minute chart, your risk management and parameters have to be different. Position sizing has to be completely different. So I'm talking a little bit of a bird's eye view. So I prefer to trade on the 4 hour, uh, and some people prefer to trade on a 1 minute chart, 5 minute chart, whatever. Because here I can spot their bullshit a lot easier. Again, look at this price section here. All fucking bullish bars nonstop. And look how many: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. After 11, a little bit of a initial profit taking. They took it one more time for people who were late to this party. Like, oh my God, we're getting a deal. And it popped, make new high to sucker in breakout traders. Oh, this is going to the moon. And then they reverse on them, and then off it goes. There goes the stop losses, accelerating of stop losses, blah blah blah, and even took out the lows of those who had a wide stop loss, and then once they cleared out those stop losses, a nice reversal bar, and then they push it back up, and on and on and on and on and on and on it goes. All right, 63, oh motherfuckers. All right, like I said, as long as we're capped by within this range, this so why am I making that example with the 10 with where was it, with this type of price action here? This is what they can do with gold too. When you have, see, 1, 2, 3, 4, 5, 6, 7, when you have so many bars in a row, like even here, 1, 2, 3, 4. We're not even going to count the 5, 6, 7, 8, 9. So when it goes to 7, 8, 9 bars, and they're all same direction, same, there will be profit taken. And again, if you're selling pretty much at the end of this move, it's a counter trend move. First of all, you're not selling on counter trend. The overall flow is still down. But on a shorter term time frame, this price is going to exhaust itself. It's unsustainable. These moves like that are unsustainable, like this one here, and that's why it sells off, closes these price inefficiency gaps, and then yeah. So that's why it's okay to trade, to hold. Obviously you didn't sell it right here, so you're selling it almost at the end of the move. Where the end of the move is going to be, who knows? I thought we're going to be, running out of steam somewhere here, but maybe we'll go a little higher. Maybe even take out these stops, a little spike, and then that was going to be the final exhaustion. All right, guys, I'll be back. What else? Yeah, I'll be back. Euro USD, which graph is gold? This is all gold. This is weekly, daily, 4 hour, 1 hour, and 1 minute. Put it back in 15 minutes. So this just gives me a bird's eye view of what's going on. So like this is on weekly and daily, I see long term trend. So that, and key levels as I have marked them, right. So I see key levels. What the fuck is going on the from a 10,000 feet above view? 4 hour, 1 hour, and 15 minute is 4 hours where I make my decisions, and then execution on the 1 hour or 15 minute or 5 minute chart. So that's why. All right, and what somebody asked about Euro USD, Euro USD, Euro USD. All right, so again, Euro USD already did 124 pips today. Usual range is 98 pips. So this thing is already overcooked. Again, it's dead its range. It's over its range, just like gold. It's hitting up this previous trading range, and you're getting a lot of hourly overly bullish bars. So this is going to exhaust itself pretty soon, and let's see. So maybe we'll go a little higher here, and that's a 98. You know what? To be safe, just sell 99, put a stop above parity somewhere, and that's it. Again, that's a swing trade. because if you're gonna sell here with a wide stop like that, you're gonna have to target these lows here. All right, boys and girls, be back in a little bit.